Good evening, ladies and gents. Welcome to another video brought to you by Total Control Traders. Alright, let's get right into it. First one, SPX Market, SPY, ES1, whatever you want to call it, whichever one you're looking at. It's all similar charts. Oh, maybe except for SPY, there's going to be gaps here and there. But, alright, SPX. We saw follow through today after this rising wedge, bear break, and now we saw follow through. What was the target that we were looking at for this follow through? It was right here, the previous high back test, which is close to the GP. And also, I was also looking at this one, the most recent trend line, lower trend line. Because of how fast we dropped, how early that follow through came through, we did not touch the trend line, but we did touch the GP, the previous high, before the bounce begun. So today was an interesting day. It is a bounce day that you can expect a lot of tickers to see some decent bounces, but I think that may be delayed a little bit now by a day or two, just because of let's take a look at SPX early on. You know, right on the open there was an immediate small buy up followed by consistent bearish pressure, selling off. So I was looking at this on the 30-minute today. You can see 30-minute rejection. That was a red flag right there. 7:30, 30-minute rejection, found that previous high, bounced from there, and then rejection again. And then going into midday, afternoonish, 30-minute rejection again, but no follow through. So this GP held. Then towards the end of the day at 1:30, the last 30-minute bulls came in. So what this is leading me to think, so majority of this dip buying was at the end of the day. What this is leading me to think is we're gonna see a temporary bounce, whether if it's gonna be tomorrow or we're gonna come somewhere around here. So Tuesday, Wednesday, Thursday, Friday-ish, where the real bounce might begin, where the trend line lines up with the GP. So there's a couple scenarios. What could happen from here? Bullish scenario. Always keep both bullish and bearish scenario in mind. So you know which direction you're playing. You have a game plan ready in case it doesn't go the direction you're looking for. So from here, let's say, bullish scenario. We're going to go up to that 88, which is going to be around that 0.5 as well. So this could be very well be a ABC correction. This being the A. Actually, let's just draw the whole thing out. So this is A, and then B and C. That comes to the trend line kind of thing before going back up. So making a lower high. GP right about here maybe, and then higher low before bouncing back up again. So that's scenario number one. Scenario number two, what we could be looking at is the A is not done. So from here we go straight to the GP and then bounce up to, I don't think this is correctly drawn. It's a little bit lower now. Okay, so minor difference. Oh, nope. So scenario number two, bearish case. From here we have slow fading scenario into the GP lining up with the trend line before the bounce into either one of these three, 0.382, 0.5 or GP. If we drop that significant, I would anticipate the bounce to be a little bit weaker, maybe at the 0.3 0.382, and then coming back, double bottom kind of scenario. Actually, this will make sense before making a movement up again. So couple scenarios that I'm looking at. Today's end of day bounce was decent, but the red flag from today is, if you're looking at the 30-minute, they faded it instead of a drop, making it extended, and then a decent bounce. So they faded this, and then now it's a 30-minute bull flag after hours. But essentially, if you look at the 4 hours, it is still trading under the 4-hour 8. So the bounce is not strong enough, and if you look at the volume, not exactly there. So a little bit of a cause for concern if you are playing bull. Have some bull positions. I am in some bull positions, but not for SPX, more so for Russell. SPX has very easy level to play off of today. Just a matter of how it faded, making it a little bit harder. The other thing is, if you're looking to play SPX, one of the major sectors that's within SPY is FAS, which is banking sector. And if you look at banking sector, this is looking more and more so like a ABC pattern now. So this one, A down here, B somewhere up here, and C now I'm looking at over here. So C is the one-to-one extension target at 81.17, which also lines up with the GP of this most recent run at between 80.88 to 83.14. So with FAS looking like the potential, likely a ABC pattern now, meaning SPX could be looking at a little bit more further downside. We did break into a new lower low today on FAS. Keep an eye on that. It's something that I'm looking at for maybe an indication of what SPX might do. Remember, FAS did run from $30 all the way to 4 times that, 126, within a matter of, how long is this? 150 trading days. We'll call it 300%. Okay, yeah, 4 times the price, 300% return in the matter of 150 trading days. Since the beginning was October 2020, so in less than a year. Meaning, if we're to look at retracement on this, I think this 0.382 or the GP would be the minimum. If we're to look at the whole move, let's just draw this. The whole move, even if we were to get to the GP, that is still just above the 0.5. So $81, it does make sense for a retracement on FAS, meaning SPX could be looking at further downside. Next is NAS. So with the bounce today, mainly there's a couple tickers that stood out. One is Space, the other one is Nvidia. I think there's continuation on Moderna as well, and some other tickers, a couple other tickers that had a decent bounce. But yeah, NASDAQ is the one I'm paying attention to. Now, looking at this chart, very similar to FAS, very similar to the banking industry. You know, it hasn't ran us much for as long. The ran technically begun May 13th, and it ran up 16% on a index. I think that's pretty good. So on the index, and we were in this channel for the longest time until a bear break on Friday. Yeah, Friday, and we saw follow through today, but we saw dip buying. And if you're looking at the NASDAQ chart, very similar to SPX. So where's that 730 candle? 730, we shot it over the 30-minute, but it got rejected. You can see that it's a little bit stronger in comparison to SPX. It never made new lows through the day, whereas SPX, it made new lows into touching the GP before the bounce. NAS, it never made new lows, huge upper wicks until the end of the day. Same thing, 30-minute, shot it up into after hours, new highs, but we are rejecting from this top end of the key zone right now. which was previous resistance as well as support. So it makes sense. If you look at this, two rejections here, 2 supports here, never closed under the key zone. So it makes sense that we're seeing temporary rejection from this area right now. On NAS, same idea with SPX. I think there is a little bit more downside to come over the next few days, next week or two. We didn't even touch to the 0.382 on this most recent channel move yet. So it makes sense. We're not extended on the daily either. Would anticipate a little bit further downside. Now the other thing makes me think that there is a little bit more further downside on NAS is we are near that GP on QQQ over IWM chart. If you look at this, this is a chart that we tracked for quite some time. You know, I cover this every now and then. It made, so it's basically NASDAQ over divided by Russell, IWM, okay? Double top from the 2000 tech burst, yeah, up to 2020, double top, and then came down, long-term trend line, bounced from there, and now we're, from this drop, 30% drop, with sector rotation. I think this was sector rotation back then, out of tech going into other sectors, and now it's rotating back into tech, and potentially this could mark the end of rotation back into tech because we are coming up to the GP and the previous not too much clear support here, but support over here, 1 2 3, another support before the actual breakdown. So 1.7 1.72, watch that area. Makes sense that this begins to curl somewhere around this area, which leads me to the next ticker, Russell IWM US 2000 small caps on the daily. So we tried playing Russell on this lower trend line on Thursday. Was it Thursday? Yeah, on Thursday. Had a decent bounce. And as soon as it turned red, that was a red flag for me, and we exited, took profit. Thank God that, you know, this trend line, and this is one of the reasons why I'm very keen on drawing the trend line as accurately as possible, because if not for that, you know, if you drew it from, say that you drew it from here, depending on how you drew it, you could have bought, you know, right here, which means you would have sat through this whole lower wick, and then by the time you stopped out, you would have been red. Whereas, you know, we're looking at this wedge from here, and we bought on the wick near the bottom of the wick. So by the time we stopped out, it was still a green trade. So one of the reasons why I say it was a big red flag is we saw the follow through, but then immediately rejected. Did not, was it 4-hour 8 that we rejected from? Let me take a look here. So no, it wasn't. So we did shoot over the 4-hour 8, and then bearish engulfing candlestick. Let's take a look at that already. It's right here. So shot it down, and then noon started going up. So we entered somewhere around here. Went up, but then by the open of Friday, just non-stop selling, and that's why this white line was here. I said this is a must hold. As soon as that broke, we exited. So even though it looks like, you know, profit wasn't too much, I believe it's still 2 to 3% on that trade, and then from there we just broke there. So one of the big reason why it was a red flag, if you look at this previous touches on the lower trend line, the previous even if you don't include this one, it's still 3. So 1 2 3, every time it touched, immediate bounce, touch, immediate bounce, touch, bounced up. This one touched, bounced up, but then rejected. So the next day's candle was not even green, let alone a big lower wick kind of green. So from here we did re-enter TNA today. It seemed like, you know, this support area, previous resistance, 1 2 3 wicks from it, and today the 4th wick from it look like a good low risk entry area. And after hours is green a little bit. Not to mention the QQQIWM potential rotation out of tech temporarily. Yeah, I will say temporarily because techs are the biggest bull as of recently. Apple breakout, Nvidia breakout, Amazon breakout, and there's a little bit of a fake out. But in the short term wise, Russell should see some strength. It has been in consolidation for the longest. It is the first one to begin consolidation. I think if you look at SPX, it begun technically begun on Thursday. NAS begun same idea Thursday, whereas Russell, it begun on June 28th. This is a spinning top reversal candlestick and we have dropped 10% already. Seeing opportunity in Russell and TNA is one of the ways, more conservative ways to make sure you take advantage of that opportunity. And last but not least, Dow. Bouncing from key zone, previous support, previous resistance support. You can see resistance, minor resistance here. Multiple supports here. Drop down under, support again, drop down under. So temporary bounce. Double top, big red flag. Wow. Double top to 9. Wow, so that is so close. 0.03%. Basically a double top. So double top on Dow. And let's take a look weekly wise. Is there a bear divergence? Ooh, huge bear divergence on Dow. This was the high, roughly, yeah. Look at this huge bear divergence. I would anticipate much further downside to come for Dow. We are trading under that pandemic trend line on Dow as well. So, where would that bring? Where would we be looking at for retracement? Couple zones I'd be watching. First and foremost, ultimately, I think this one should be the real fib because it's previous high support. So I would draw it from here if you're thinking of, wondering which one to use. But sometimes I like to, most of the time I like to draw all important levels out because you do tend to see reactions, especially if it lines up with anything. So first one, draw fib from here, previous rejection support, and the next one is the run, same idea, the wick from the pandemic trend line, and then the previous all-time high. So with this, let's see, does it line up with anything? 0.382 somewhat, it's still in the key zone. GP, not really. Okay, just a matter of how fast we drop. If by early next week it continues to drop throughout the week, and then by early next week, ultimately would anticipate a bounce from the 0.5, we would be so extended. First level to watch obviously is going to be the 0.382. You can see computer is lagging. It's gonna be somewhere around there. You can see the bottom, towards that bottom of the key zone, previous rejections, double rejection, double support. So that 3360 That'd be the first level to watch for a bounce if we continue to drop. From here right now, we are bouncing from the top of the key zone, and the drop came relatively quick, so would anticipate a slight cool off first. Now on this bounce from the top of the key zone, watch whether if it's going to be a bear flag formation or if the bull volume is going to be showing up strong. All right, let's get into some of the tickers, some important tickers. We're gonna remain consistently covering the top big techs until something significant happens or some other things more interesting happens. So let's start with Apple. I really like what Apple's doing as a consolidation kind of thing. So we exited Apple put today, and even though it looks like it's just the beginning of the consolidation, there's a reason why I decided to exit and take profit on Apple put today. I believe, was it Captain Koala entered on this day, July 13th, and I entered 2 days later looking at this candle. So the reason why I decided to exit, not only is it because there's only 4 days left on those puts, but also looking at the consolidation on Apple, we did just lose the 88. There is a gap left behind. Now I'm looking at it, you know what? Probably could have kept half of it. But I think 4 days is not enough time. It's just not my playing style, my personal trading style. If you are looking at playing bearish, whether you're shorting or you have puts for next week, the week after, August kind of thing, I would say there's no reason to exit yet. On here, ultimately retracement wise, I would still be looking at the 0.382 at the very minimum, which is around 139. Yeah, but it makes more sense to touch this previous resistance around 138. We saw 1, 2, overshot, breakout, fake out, another rejection here. So about 3 to 4 rejections around the 138 area would make sense. It does not line up with the fibs. That's the only thing. 0.5. Yeah, 0.5 would make sense too. 136-ish. Somewhere around there. That does line up with the 0.5, and there's a clear rejection here as well. Clear rejection here. A little bit less clear over here. But if we're looking at 136, the only thing is I would say that we wouldn't get there immediately. We'll likely come to the 0.382, make a lower high before a lower low with kind of an ABC correction pattern into that 136. But Apple is looking very decent for consolidation. I'm making sure, keeping a very close eye on this to see. I want to see where the higher low sets in at, because on Apple, I do believe this is gonna be a continuous mover. From here, higher low, back test. Oh, that would be my first entry for sure. The back test of this previous resistance, and then a second entry, maybe the GP. But I am keeping a very close eye on Apple. Next is, let's do the double A's. Amazon. Amazon, charts a little bit messier. So Amazon had a run towards the end of the day along with market on the last 30 minutes. If you look at this last 30-minute, volume came in, very nice move. We did lose the GP. So I was looking at this earlier today to see whether if I want to play it. 15-minute was it? There's a few things I didn't like about Amazon, and that's why I decided not to play it. While the market was bounced here and there, it sort of just faded all day. We did lose the GP. Volume wise, nothing consistent until the end of the day. And the other thing I didn't like about it is looking at the daily. There's for those of you that watched the last week's video, I can't remember which one it was. There was a potential. We discussed the potential of a 1, 2, 3, 4, 5 pattern, meaning there's going to be an ABC pattern. So with that, from here, if we're looking at the Amazon bounce, I would anticipate a gap fill at the very, very minimum. So there is opportunity for a short-term trade. The 88 makes sense, lines up with the 0.382. So if we do come up to 3,600, I would say give it 2 days, 3 days kind of thing. Anticipation would be something like this. Might get to the 0.5. Yeah, I might get to the 0.5. And then down here. I don't remember what those trend lines are, but usually, it tends to gravitate towards, if it's already in the trend going towards that direction, it tends to gravitate towards where trend lines intersect. So this lower trend line is the pandemic trend line. We've seen 1, 2, 3, 4 bounces from there. This upper trend line is the long-term resistant trend line ever since the previous all-time high. We've seen 1, 2, nope, 3 rejection from there. So if we're to backtest it, makes sense. It is a potential. So it did come back right away, breaking bear. So that trend line is not useful anymore. Look at that. The reason why we bounced from where we did today, aside from the GP. So we did lose the GP, but it came back to backtest this previous high resistance trend line. Okay. I see you. All right, so from here, bounce would anticipate somewhere around the 0.5 before coming back down to backtest the previous high trend line, which also lines up with the lower part of the key zone. You look at this right here, that 34 mark, 1, 2, 3, somewhat of a support. Didn't close over. So 34 mark is very significant, that lower part of the key zone. Oh, that would also bring us to this most recent moves GP. All right, so keep an eye on Amazon right there. Most ideal entry. And next is Microsoft. Ooh, daily bear divergence. Follow through. Big lower wick, or a decent lower wick. Is it the same last 30 minute? It is the same last 30 minute. All right, so we are in that upper trend line of the channel. Depending on how you draw the channel, there's a chance that it could be like this, which is a little bit higher, or there's a chance that this is just a slight breakout, fake out kind of thing with this long-term channel. GP, ultimate target, still right here. GP of the most recent move, lining up with the lower trend line of the channel. Microsoft is a steady mover, steady Eddie. Very easy to determine the levels to play. So returns a lot less comparing to what the volatile stocks you might be used to. But one thing I do love about Microsoft is how easy it is to determine where your entries, where your stop losses, where your exits should be. And right now, I am eyeing here. One didn't touch here. 1, 2. So it did bounce. Okay. 1, 2, 3, 4, 5, 6. 6 touches on the lower trend line. 1, 2. Almost. 3, 4. 5-ish. We'll call this, 0.5. So 5 touches on the upper trend line. Easy levels to play off of. Microsoft, give it more time. And if it does come down, it would confirm, I would anticipate that if the Microsoft continues to drop, I would anticipate that the market is going from instead of a correction, consolidation phase to a correction phase, meaning that we're going to be seeing ABC further downside on the market, especially NAS. So next is Nvidia, one of the top bounce names today. Let's cover the next two top bounces. Nvidia Space, yeah. All right, Nvidia had a very nice bounce today. Were we extending on the daily? We were somewhat extending on the daily. Not exactly at the trend line. So that's why I didn't play the Nvidia today. Aside from the fact that split is tomorrow and you generally see, especially on the known event, sell the event kind of thing, we did not touch the trend line. If we did, yeah, I might have played it. Ultimately, the first target was the 0.382, and we did get to the 0.382, just below it. Remember, same as, you know, extension targets, it tends to overshoot it a little bit. So just below the 0.382, and then we start seeing a bounce right away. Right as market opened, 7:30, it started going. Bull volume, not significant, but it was held up until that third 30-minute candle. It dropped off by half. And from there, we sort of just went sideways, bled out a little bit until the last 30-minute bull volume came in again, but unable to make new all-time or new high of day. So Nvidia, tomorrow is going to be an important day to watch Nvidia. Split on stocks. I think part of the reason why there's so much bull volume, the decent bounce today, was because of that split. People want to get in before the split, and it's a psychological thing where they think, oh, well, you know, I spent $750 to buy 1 shares before, but now all of a sudden I own, what is it split? 41. My $750 became 4 shares, so I own more of Nvidia. No, you don't. But it's a psychological thing. So I'm thinking there's part of the reason why, part of the bull volume that would explain today's bull volume. All right, so watching tomorrow, seeing it's going to be a solid event kind of thing. ABC. No, so we passed this. So this could be just an A. Previous highs. Why is there so many trend lines here? Okay, they are all relevant. You know, look at this one, the white one, 1, 2, 3, 4 rejections, overshot, came down, and then over. So the white one is ultimately the one I'd be looking at. Not seeing a very clear pattern right now. Let's have this on as well, just in case that there is gonna be a, ooh, that's gonna be low. All right, next is Space. Space, decent bounce today, right from the GP. This chart looked a lot better to me in the morning. Even though it didn't, it's the same as Nvidia. The tickers that bounced today, they did not touch the trend line, but Space has been in consolidation after 300% run. I want to say 300%. Come on. Yeah, 300% run. And now we have gone into a 50% consolidation. So giving half of that 300% back. So with Space, is this accurate? Yeah, so Space came to the GP, and from GP, that's why I entered today. Did a scalp, have some left, just because market was choppy, so decided not to swing the full position. For Space, let's take a look at the 30-minute. Right at open, we opened on that lower end of the GP. We did wick down under. Bought it. Yeah, I bought it pre-market. Now where's my, okay. I was very lucky I bought it. What was it? 2780-ish, I think I bought it. That doesn't even make sense. $28.28. Okay, 28.28 was where. Okay, so right in the middle for the pre-market, and then by the time it opened, it was right at the low end of the GP. Wick down there, immediate buy up, and it has not lost that 30-minute 8. So there's no actual reason to sell space. If you're in comments or if you're in calls, you know, kind of thing, there's no actual reason to sell space yet. But just don't want to, you know, wake up tomorrow, market open, and all of a sudden I'm down however much kind of thing. In this kind of environment, remember, you're playing counter trend if you're playing bulls. So be comfortable with what you're swinging. No need to oversize, no need to be a hero, you know. This is very nice bounce. We have gone a lot of the move. So from here, this is another 11% till the daily 8. Another 22% till the 0.382. Tomorrow we're going to need to see that follow through. Today's bull volume is decent. We're going to need to see that follow through. And if we do see that follow through tomorrow, I would anticipate a bounce to, at the very minimal, 0.382, which brings us to 39.66. And next is, let's talk about Disney. Oh, one of the weakest. You know, this is a bull break, very nice, held up, bull flag, and then boom, bearish engulfing, and gap down, continue selling. So Disney is, if you lost money on Disney, hopefully you stopped out on Friday, because this bearish engulfing, not a good idea. But Disney right now, give it a little bit more time. Not if you were in, well, I guess if you're still in comments, you stop now. If you're not stopped out yet, this is increasing bear volume. By the time with 170 is lost, that is going to be a huge red flag. 167 is a must hold for bulls. This is not a good sign. You know, bull break, bull flag. Booyah, surprise. And just drops down. Disney, not going to be on one of the top big techs. We're going to need to see what happens over the next little while. This lower trend line ideally holds. Judging by the price action, I can see that it is going to break bear, especially if the market is going to go from a consolidation to a correction phase. But I do anticipate that, you know, market is going to make a lower high. When it does, we're going to need to see what Disney does here. But, you know, of the big techs, there's so many other better names to be playing, considering the last 2 days price action on Disney. Look at Apple, look at Amazon, look at Microsoft. You know, everything is still up there, whereas Disney gave the whole move back in 2 days. Okay, next is request tickers. First one, HOM. Oh yeah. I know you didn't request this today, Kwanzaa, but I just want to check back on it. Okay, so still bull flag, weekly bull flag. Weekly 8 has not been lost. Oh, strong name. Yeah, it might actually be a decent entry spot as of today. A triple bottom, 13.01. Yeah, 13. Wow. Easy stop. You know, you enter around 13 point. My trading would be like, you know, 13.05, 13.08 kind of thing. Give it a little bit room and then make sure it fills, and then stop right below 13. The problem with this is if you put your stop right below 13, there is another support right here, 1925 and 1295. If I were to place a stop on this, I would probably place it under 12.8. Well, just depending how you want to be, how conservative you want to be. Never closed under the 12. Never closed over the 1285 until this candle right here. So there is, you know, a wick zone around here, but as of right now, 13 is the most clear, prominent support. RSI is cooling off. Weekly bull flag looks amazing. Yeah. It didn't even reject. Technically, it didn't even reject from the 1.618 extension target. It just is stalling here. It's cooling off the RSI. I would anticipate a few more weeks. RSI is still at 60. Okay, maybe 1 or 2 more weeks kind of thing. RSI is still at 68. All right, next is GDNP. Good nature product. Oh, we looked at this before? A long time ago. We looked at this all the way back December 2020. Let's see if this still applies. One of the zones we discussed before, and it does still apply. So clear rejections from before became clear support and just chopped around right in that zone. It's probably a better way to draw this zone, but let's see. How does that work? Meh. Yeah, I probably look at these two zones. Let's clean up the chart here. GP bounce. Wow, this is amazing follow through on this GP bounce. GP bounce, and from there 171%. Amazing. Let's remove all these. So bull divergence, hidden bull divergence, didn't see too much follow through, and now there is a wedge forming. I probably used the $1. Somewhere around here. Wedge forming. 1, 2, 3, 4, 5 touches on the bottom. 1, 2, 3 touches on the top. Wedge is about to break. Easy stop under $1. You know, to be conservative, you can put it under the 96 cents. Because if that is lost, you'd be looking down here. Oh, come on. You'd be looking down 80 cents zone. I don't like this. There's no clear support in this area. You could just say somewhere around there. 77 to 83, so 80 cents area. If the dollar is lost, you'd be looking at another 20% drop. So easy stop. Today I touched a dollar again. So same with HOM.U kind of thing. Today, tomorrow we could see another touch. Remember, give it a little bit room. Like, you know, this dollar next day it didn't get to the dollar, but it did. It was at $1.01. Where'd it go? Okay, yeah. So $1 would be your entry, or $1.01, $1.02 kind of thing, and the stop would be under 96. If this breaks, let's see how the last move worked out. Last move was a rejection from the at the 1-to-1 extension target, overshot it, same as usual, you know. And then the next, so if 1, 2, consolidation looks really nice. So if this breaks, there is a potential to go up to 2.21. One problem I would have it with this chart is this is a very clear 1, 2, 3. Okay, need to. You get the idea. This is a very clear 1, 2, 3, 4, 5 pattern, and now A, B, C, A, B, dragged out kind of consolidation. Okay, so even with that, I think the chart looks really nice. Yeah, I might take a look at this. You know, just put in, since it's $1 a share, throw 100, throw like, you know, 1,000, anywhere between 1,000 and 5,000 kind of thing in there. If it does go to double, then you or $2, you double your money. I like it. And make note of this. All right, next is Nike. Lost at 88. Crazy earnings run. This gap, whoever played it, congratulations. Whew, 14%. You do not see that kind of move on big, what is it? Big caps? Major caps? Often. So it gapped up and continued running, and now we lost at 88. So potential for beginning of a consolidation phase. If that is the case, then where would we be looking? I wouldn't really say gap fill, because that's going to bring us to all the way back down to 34. Unless, you know, at least for bulls, you do not want to see a loss. A loss of this gap lower end, 150, is a red flag. Because from there, the next support you have is 148, which is not even strong. 147 is a little bit stronger. Let's just draw a zone here. I don't know why I'm doing that. All right, it's gonna be around 145.5 to 147.5 once that 150 is lost. And then if this is lost, the next support down you'd be looking at about 139, 140-ish. So as of now, you know, if you're playing bull on Nike, ideally you would have been in profit already, you know, entered before the earning. If not, even if you entered after the earnings, you should still be in profit. Loss of the 88 is a little bit of a cause for concern. And if you look at the RSI, it is cooling off now. It was in the 80s for quite some time. They kept it up, and now the bull is running out of steam. So with this, if I'm looking at this, I would anticipate further downside. Consolidation at the very least. At the very least. So even if we were to look at this, so it is bouncing from the 0.5. There's a huge. The big concern I have is there's a huge gap here, and gaps always gets filled. Gaps always gets filled. So even if you were to look at the gap to 148, you know, first entry I would look at would be around 148, which is under the 0.382. The 0.5 might make a little bit of sense for even first entry. I want to say second entry, even first entry. 144-ish. You can see clear rejections here. But right now, I would not be entering bull on Nike. When was the last time? Okay, look at this one. This is the last big gap here. And it's the same earnings. 101%. Similar. Yeah, so very similar. Nike, huge run up. Difference is sold off immediately and then making new highs before coming back down to fill the gap. And then once it filled the gap, you can see that it continue running. Okay, right here. It filled the gap, plus a little bit more. So I would anticipate a gap fill 148. That would be ideal first entry. All right, next is Moderna. Congrats, Moderna bulls. Yeah, there we go. Congrats, Moderna bulls. 10% run, continuation. And where are we looking for target? So I was looking at this chart earlier today. Why does my chart look like it's missing something? Anyways, I was looking at this chart earlier today. It just, whoo! This was the lower trend line. This was the early upper trend line. Okay, ever since the vaccine came out, it just run, reject, and then run, break over, came back down, break over again, and now this is a new upper trend line, and now it's broken bull again. What a crazy chart. If you just held, you know, since the announcement of the vaccine, I can't remember the date of it. I imagine it's one of these gap ups. 87 kind of thing, you know, you'd be looking at triple already. Jeez. So with Moderna, we're now looking at the 1 to 1.618 extension target. We already overshot the 1. Yeah, we already overshot the 1. The most recent move, is that what I did? Yeah, we already overshot the 1. 1.618 is up ahead. If we were to use this one instead, most recent. Let's see, does it line up with 2? Nope. Huh. It lines up almost perfectly with the 2.272 extension target on this most recent versus this bigger move from back here. So 333 would be the target that I'd be looking at for Moderna if you are in bullish. There is no sign of Friday was potential sign of volume climax, but the candle did not justify it. It was not a reversal or indecision candle, and today we saw continuation with volume. So 1, 2, I can't, yeah, this can definitely go to 333, no problem, and potentially see a stall from there. I would look for a bull flag formation. There's no bear divergences, no red flags on Moderna right now. Congrats, Moderna bulls. Next one is Visa. Ooh, okay, that didn't work out. I was looking at this last week on Wednesday or Thursday. New all-time high. This reminds me of Disney. Jeez. New all-time high and just gap down, continue selling, eh? No divergences. It's been a long time since I looked at this name. Look at this beauty of a backtest. So reject 1, 2, 3, 4, overshot, breakout, fake out, came back down, and then finally the breakout and backtest. So what I'm noticing is actually, you know, once you have a lot of rejections on the trend line, before the actual move, seems like there's a breakout, fake out, backtest, and then actual move. So let's. What was the other one that we just saw? Was it Nvidia? Nvidia. Just want to take a look. Rejection, rejection, rejection. Breakout, fake out. Came back, GP, and then the actual move. Okay. So same idea. What about Apple? Nope. Amazon? Yep. So 1, 2, 3 rejections, breakout, fake out, came back down. Was that the GP as well? And that was the GP. Okay. Something to make worth making note of. Multiple rejections on the trend line, breakout, fake out, came back to GP, and then the next one will be the actual move. Very interesting. Learn something new. Potentially learning something new today. Visa. Okay. Breakout, fake out. And was this GP? And it was GP. Wow. Every time. So keep in the, I don't even know if there's a name for this pattern, but for those of you that aren't watching, I think very worth noting, if there's a trend line rejection, multiple rejections on it, and then on an actual breakout, the first breakout, if you didn't catch the first breakout, it's okay. Be patient, watch for potential retracement to the GP, and if you start seeing a reversal from there, that is the next move is going to be highly likely that's going to be the actual break. So then if that's the case, do we have, looks like we lost the GP on this one already. Unless, is this going to be the GP? Well, maybe not. Might be. Okay, so if this, I don't think this works. Give me 1 sec, guys. Gonna make a note of this. Amazon? Amazon. Apple didn't do it. I think Nvidia did it. Yeah, Nvidia did it. Nike, nope. What's the other big wedge that we were tracking? Anyways, sorry, lost in my train of thought. CGC, head and shoulders pattern, follow through. We are seeing follow through now. Still no sign of reversal yet. No divergences. RSI made new lows. It is oversold on the daily. On the weekly, not seeing anything significant. So on the weekly, what we could be looking at now, let me just do this. Sorry. On the weekly, what we can be looking at now is this long-term weekly trend line, this blue line. Okay, saw a bounce here, all the way back here. 1, 2, lost it slightly, bounce. So 3, 4. This blue line must hold. I'm gonna change it to the normal patterns. Sorry, that's just easier for me to see. The white trend line must hold. From here, I can see a touch of this white trend line would go heavy on it if we do visit it. So let's take a look at the extension targets. Last time I tried drawing this, I don't think it worked. Would you look at that? 1.618 extension target lines up with that white trend line. So 16, 18 CGC, keep an eye on that. That would be the target entry price. Last but not least, let's take a look at a couple other names quickly. BA in the buy zone. This is no longer the scenario of a potential breakdown fake out because it is breakdown follow through now, but it is in the buy zone of this double trend line, and the white trend lines always are the ones that must hold. So the white trend line would be your stop. Daily oversold, would anticipate a bounce relatively soon. We are extended from the daily 8%. Keep BA on watch for a bounce. And then the other one I want to look at, ABNB. Oh yeah, so Airbnb is in an interesting area right now. Depending on how you draw the lower trend line, this could be the low right now, but there is a little bit more. We're sort of in the middle of that lower key zone, so there could be more room to drop down, meaning we have to change this lower trend line, but this could be the bottom of the lower trend line. It is indecision candle, so tomorrow we're going to need to see whether this follow through. If there is, I would consider putting a position. I would definitely put a position in for Airbnb. This upper trend line has been shooting us down. If you look at the 1, 2, overshot it a little bit, double top, then came back down, another rejection, one more, and as of recent, lots of rejections around here. So this upper trend line is a must close over. We are reaching the apex of this potential wedge. 3 touches on the bottom, multiple touches on the top. Keeping a very close eye on Airbnb. Last time we bounced, we got rejected at the 0.5, and that's why we're revisiting the lows again. I think the last but not least, oh wait, yeah, there is one more. RBLX, relative strength today. Now I'm tracking this potential wedge, descending wedge, with the lower trend line. That is potential lower trend line because we did bounce from this previous key zone resistance area again. Not again. Last time we didn't touch it. So this time we shot under the key zone a little bit, but it was very notable all day, similar to space, just relative strength all day. 7:30 was a little bit of a fake out. It went upward. Let's see. The bulls came out and then they shot it down, but huge lower wick. So if you go to the even shorter time frames, you can see this was a bull divergence and we'll just continuous follow through from there. Yeah, continuous follow through from there all day, and into the end of day was a bull flag formation on the 30-minute. So keeping an eye on RBLX tomorrow. All right, that's it for today's video. Thank you guys for watching. If you enjoy the content, please share the channel, share the love. If you have any questions, make a comment. Any tickers specific tickers you're looking at, let me know. We can take a look at it together. Anyways, thank you guys for watching. I will see you in the next video.